We have a lot to talk about in this evening's video, ladies and gentlemen. We have a lot of positive news coming out for the market here in relation to trade talks, rate cuts, and a whole bunch of other things as well. And we have three stocks to talk about this evening: Palantir, Sofi, and Neo, all looking very solid on the charts, as well as some very important pieces of news that yourselves as investors need to be aware of moving forward. So guys, we have a lot to talk about here, but before we get into all of that information, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed and turn on notifications so you're notified every time these videos do end up going live. Now, if you want to join the investing group that I have right now, again, it's only $10 a month. If you guys want to hop into VIX Insights, get the weekly market research reports, the macro research reports, the weekly Q&A calls, the single stock research reports, the big overarching macro research reports, and be able to ask me questions about anything as it relates to the market at any given time, make sure you guys check out that link down below. But let's get right into it here. So first, starting off, we're going to talk a little bit about the broad market here. Now, again, as you all know, we have seen a lot of presidential posturing trying to get Jerome Powell to decrease interest rates in the short term here. Even though he is not the only person that is deciding that, there's a lot of pressure coming from this administration for the Federal Reserve to start cutting rates. Now, Waller actually came out with some very interesting statements today, and he said that he doesn't think that we're going to see enough happening in real data in the next couple of months until you get past July. What they're talking about there is unemployment data, GDP growth, or the lack of growth, and the inflation data. Because right now, remember, almost everything that Jerome Powell has said over the last couple of months has been laser focused on inflation and really less so paying attention to the effects of growth in the unemployment rate that we have been seeing or projected to end up seeing over the next couple of months. Again, we have seen those Atlanta Fed GDP expectations dropping through the floor there, little bit of kind of flickering back and forth. Again, today, we did see that reading drop back down to about negative 2.5% for the first quarter here. But what's interesting is that Waller is willing to look through whatever price increases there are. If I see a significant drop in the labor market, I would expect more rate cuts and sooner. A big to be sure. It's going to take some courage to stare down these tariff increases and prices. The reason why Waller is saying this right now, ladies and gentlemen, is because he understands that the medium-term effects of these tariffs is going to be deflationary, not inflationary. When you have consumer sentiment at significant lows, you have one-year inflation expectations reaching up to 7-8% right now, well, the consumers are not going to want to pay higher prices, which is going to change their purchasing decisions. If that ends up happening, demand starts to drop, which is then going to limit some of those inflationary pressures of whatever tariffs we actually end up seeing. Now, in addition to this, we also have Trump saying that we are getting very close to a trade, or not a trade deal, a deal on the war in Ukraine, which again, markets are going to like as well. And at the current time that I'm recording this video, it does appear that the market is looking to break out here over those Wednesday, April 9th highs, when we did see a lot of these kind of new and reciprocal tariffs getting walked back. So a lot of what we're seeing now is the new administration is now putting a greater focus and emphasis on deal making versus the punitive nature of some of these tariffs, which the market is definitely going to like here. We could end up seeing a move back up in the S&P 500 ETF here, the SPY, back up to that 577 or 557, 557 area here, kind of where we were going into Liberation Day. Now, let's talk a little bit about a couple of these individual stocks here. Palantir in particular here is having an unbelievable day, really cementing its move above 100, getting up to that 107.44 area right now. At the current time that I'm recording this, it's up about 6.5%. Now, this is coming off of the news yesterday that Palantir and Google are expanding their cloud computing partnership to target federal agencies. Now, again, guys, there has been a lot of talk about the new ways that this administration is going to be spending money and kind of becoming more efficient. Now, with kind of the coming to the end of Elon Musk's time at Doge, we really didn't see all of these potential spending cuts or cost savings that a lot of people thought were going to happen. We are also seeing the defense budget actually going up, or proposed to be going up, over the next year or two here. So again, all of those fears around whether Palantir was going to have some of these defense contracts cut, which again, we've talked about this many times in the past, they were not on the chopping block in any way, shape, or form. But having this coming back here and seeing Palantir continuously get new commercial and government contracts is definitely a very, very strong development for them moving forward. And again, going back to the chart over here, we're talking about the S&P 500. We're talking about Palantir having an amazing day. Those of you guys that were buying the dip down in this zone that we were talking about over the last couple of weeks here, those were very, very successful buys there. But again, I want you guys all to realize that this big macro situation is still going to take a lot of time to develop, and you want to make sure that you're taking everything slow here and not trying to rush back into the market with too much speed. Again, in this environment, it is always going to be better to be late than wrong. So now let's start talking a little bit about SoFi, the recent news that came out with it today, why this is important, the chart, and where we could see SoFi moving forward here after some of the really solid pieces of news that we talked about yesterday, when they are planning to unveil those level 1 options, those cash secured puts and covered calls for their customers. So moving over here, SoFi is making student loan repayment more flexible with the launch of Smart Start, a new refinance option. With Smart Start, people can put money they'd otherwise use on student loan payments in the first 9 months towards supporting life transitions like finding a new job, relocating to a new city, or searching for a new home. A recent Gallup survey found that 71% of student loan borrowers delayed at least one major life event, like buying a car or moving out of their parents' house, because of their student loans. With Smart Start, members can refinance their student loans and pay only interest for their first 9 months. This keeps minimum monthly payments low and eases financial stress as they start their next chapter. Now, when you think about that initial kind of reading here of that Gallup survey, if you are then going to be spending money on these student loans versus going out into the economy and purchasing a car, moving, again, that is not going to help the growth of the overall country when so many Americans are saddled with unreasonable amounts of debt. Now, we could get into a conversation about whether people should be taking student loans or not. That's not really productive for the purposes of this video here, when the kind of fact remains that these loans do exist and they are out there in the present here. But this could definitely be something that SoFi can take significant advantage of, especially after news this week came out that student loans in default to be referred to debt collection. Education department says this is going to be coming out in May here. I believe it's May 5th. That these are going to be starting to get collected, going into collections here. Yeah, beginning May 5th, the department will begin involuntary collection through the Treasury Department's offset program, which withholds government payments. If this is already happening, think about all those people out there that are going to be perfectly suited for this new SoFi's refinancing program with these student loans. Now, when you combine that with everything else that SoFi is doing, getting back into crypto, which we talked about yesterday, making their investment platforms even better, SoFi is positioned in a very, very good spot going into the next couple of quarters here. And again, that is being reflected on the charts sort of recently here. We are seeing the potential start of the shift of this downtrend that we've been in going into earnings. Now, again, I said it in the last video, this is actually the second time I've ever talked about SoFi on the internet here. All of you guys in the private community, whether it be Less Trades, More Profits, the short-term trading community, or VIX Insights. Again, I bought SoFi, I believe it was last July. Right in here at about, July at about $6.55. So this has been a very, very successful position for me so far. And it would be awesome to see this shift, this downtrend here, consolidate above this 200 exponential moving average going into earnings, having some positive reaction on that earnings and getting a nice boost up to kind of break this little downtrend that we've been in, getting us above that 1388 area, approaching 14. Now, the last ticker that we have to talk about this evening with you guys before I send you on your way is going to be NEO. So we've got a decent amount of news to talk about with this one, and a chart that is kind of coming back from the dead here, which is always nice to see. Remember, NIO is a very, very risky position. This is the riskiest one that I've kind of outlined over the last couple of months here, and one that is really kind of looking for a significant turnaround in the way that they are operating their business. So again, just want to make that clear. Make sure that you understand the risks with anything that you are investing in. So over here we have Onvo to begin the L90 deliveries this August across China. Remember, we've talked a lot about the overall big picture situation in the global landscape where consumer sentiment is very low. We have people around the world worried about a global economic slowdown, and with NIO positioning themselves as a premium and luxury electric vehicle manufacturer, it's going to be very difficult for anybody looking for a new car to justify going for those higher price point, more premium vehicles. But these sub brands like Onvo and Firefly are definitely bringing the potential for NIO to drive more sales and more brand awareness. So seeing that they're going to be begin these deliveries of the L90s this August is definitely a positive development here. Again, additionally, NIO plans larger expandable battery swap stations from 2026 in high demand cities. And again, moving over here, NIO to unveil the third generation ES8 and to launch the Onvo L80 in Q4. Now, again, a lot of people are talking about the launch of the new Firefly model, which is, again, something that NIO investors are very, very keen to at this point, because, again, there was a lot of hopes going into that Onvo launch. It started off hot, but again, it was not able it was not able to live up to investors' expectations going into the beginning of 2025. So this is going to be a model that NIO investors and shareholders are going to be paying very, very close attention to in terms of its performance going over the next couple of quarters here, especially since all investors know that NIO has some very, very lofty delivery targets for this year, especially if they want to meet those Q4 of 2025 or Q1 2026 profitability goals. And as you can see here, by the end of this year, Firefly will be in about 20 overseas markets. Now, global expansion of NIO has been something that the corporation and investors have been looking towards over the last couple of years here. They've had some success, they've had some failures, and especially with the global situation that we are in right now, with the EU tariffing some of the US electric vehicles, negotiations happening in the EU allowing some of these Chinese vehicles into their markets, we could see some shifts starting to occur. But again, it is too early to tell on that front whether or not we're going to see any significant effects to these Chinese electric vehicle manufacturers. But when we come over here and look at the chart of NIO, it is looking very, very, very strong. Now, in a couple of other videos in the past, we talked about a couple of the key levels that we needed to look out for if NIO was going to get this breakout to the upside. So what were we looking at? We saw a nice move down, a little bit of a shift of this downtrend, a nice consolidation right around this daily 10 exponential moving average here, right at the bottom of this giant range of support that NIO had been respecting many, many times in the past. Now, what we were talking about is, yes, NIO could be in for that significant breakout move to the upside here, but we needed to be very, very careful right around that $4 area. And we did see a little bit of a rejection there yesterday, but today we blasted right through that and are now trading at the top end of this zone here. Now, it would be really great to get a vertical move right back to that 200 exponential moving average on this daily time frame here, right around $4.70. But this has made a very, very significant move over the last 3 trading days here of about 16%. So it is possible that NIO could be in for a little bit of a cool off here. But as I've said many, many, many times in the past, what it's all going to come down to with NIO is how well they can execute. Enough talk from the C-suite and a lot of these expectations, because what a lot of the investors have seen with this company over the last couple of years here is overpromise and underdeliver. Now it's time to deliver, and let's see if they're actually going to be able to do it. Maybe Q4 of 2025 is when they're going to be able to hit those goals. I think that's a little bit aggressive for especially the way that the global economy is shaping up going into the end of this year, or really the rest of this year. But Q1 26, maybe they're going to have a shot at it then. So guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot, spreading these videos out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos go live. But until next time, guys, I will see you. Peace.